Okay, so let's kick things off. I'm joined by Herb Diaz. Thank you so much for joining us today.
Hey, Mike.
How you doing on your end?
Thank you so much for having me, Mike. I appreciate it. Really looking forward to it. It's actually my first time on a podcast, so really looking forward to it.
Well, welcome. And so for those of you joining, my name is Mike Blumenkranz, head of all loan origination for Arch Loans and Newport Private Group. We're a private money, hard money lender, a direct lender as well, bridge financing. And so Herb has joined me today, and Herb's company on more of the traditional side of mortgage lending and mortgage brokering. Why don't you tell us a little bit about yourself, what you do, what type of deals that you work within, and who you can help?
Absolutely. Yeah. So my company's Prime Rate Lending Solutions. I've been a mortgage broker now for 3 years, but I've been in the industry for about 21 years. So started off right as I turned 18. We focus mainly on, the traditional financing, single family residences up to 4 units, conventional FHA, run of the mill, help the good old American family get into their first home, first time home buyers. That's really what our niche is. Sometimes we do run into the occasional commercial transaction, but we usually broker that out. Would be glad to pair up with your company and be able to do that more often.
Sure. So you brought up something where you've been in this for 20 plus years, and I'd like to hear just a quick little snippet of what have you seen change in the dynamics or the landscape of real estate since you started and where we are today?
You know what? I mean, I think that probably the biggest thing, and it's going to sound kind of obvious, but it's been the internet. Because back in 20 years ago, it was, it was there, but it wasn't as used widely for real estate. I can still remember when it first started, hot sheets, you know what I mean? And
Okay.
submitting offers via fax. So
Sure.
it's profoundly changed in that sense, where now
Yeah.
we're using email, the internet's vast, and of course social media, and then everything before 2008, it's kind of like before Christ, BC, and then
Yeah.
everything after that is AD. So there's been a lot of shifts and changes, but you know what, I think that it's helped me grow as a broker and help me provide the guidance to my agents and originators, with the with the right information for them to not just get business but do it ethically too.
Sure. So you still have the fax machine in the office?
We do. We
Oh,
do.
wow. Good old
It's
days.
it's part of our museum in the corner.
Yeah. And so part of why we're having a conversation today is to really show the dynamics of two companies in a fairly different niche, but how we can work together and share a pipeline, a deal flow. And so we're going to go over a couple of deals that you've done. We'll go over a deal that we've done and just show how there's some connection for the two of us to do business together. So let me ask you a couple of direct questions as far as what your pipeline looks like. What type of deals are you looking for? You're on the residential side of the business, so 1 to 4 units. But you were mentioning that you have now a channel or an opportunity to do more on the commercial side. Why don't you walk us through that?
Yeah, so a lot of the clients that we've had, and like most brokerages, are past clients, and they all kind of grown and expanded to their portfolios. They start off with houses or start off with their first duplex, and they want to grow and grow and grow. Well, we've been running into some opportunities now where we have a client that's in their in their 4 unit, and they want to buy something that's beyond 4 units, and we have to go ahead and give them access to that. And we don't do commercial, right? We do have to broker that out. And so quite often we don't want to hinder their growth. We want to obviously expand their portfolios. And we would be able to go ahead and give, a company like yours that opportunity to be able to share that. quite often, the 1031 exchange comes to mind, and
Mhm.
more often than not, they have rolling exchanges that they've been doing, and they just need to buy something much bigger. There's
Mhm.
only so much 4 unit that they can have, and we'll have to go ahead and help them, pair up with a broker that's able to go ahead and help them with that.
Right. And I think that's where we can facilitate the capital as a debt provider for someone that you mentioned, like a 1031 exchange, rolling into a new deal, moving into a different from SFR into the commercial space. So why don't you walk us through a recent deal, maybe something that had some roadblocks in it, and tell us how you were able to overcome those roadblocks.
Sure. So, recently we had a home buyer where he had multiple investments already laid out. He was coming from his home and wanted to go ahead and move into a triplex. Now, where his had a little bit of a situation is that he wanted to move into it, where usually these products don't allow for that. They're solely for investment. Fortunately, working within that bank and through the relationships that we have with our account executive, we were able to go ahead and get exceptions to that to make it happen for that particular borrower.
Nice. So repeat client, it sounds like somebody rolling into another deal. Um, in your pipeline, what do you see mostly, new business or repeat business? What would you say the dynamics on that?
So, over the last 18 months, the predominant business that we had was repeat business. There was a huge refinance boom that we
Hmm.
experienced. I think over this last 18 months, 24 months, I could say that some people may have refinanced 3 times.
Oh,
So
wow.
yeah, because it was just, the kind of market that we were in. But as that's kind of came and gone, as we know, interest rates are up. They're going to
Hmm.
continue to increase. That's now gone. The refinance boom is over, and then any kind of market for that's going to need to, it's going to be, a little bit dry for a minute.
Hmm.
Now it's a lot of new business, a lot of purchases, and we fortunately we have a sister company that's a real estate brokerage that goes ahead and feeds that pipeline to us. And we can go ahead and originate new mortgages and
Hmm.
help people get into new homes.
Got it. So for us, Arch Loans, on the residential side, one of our top products, we'll call it high leverage, is up to 100% financing on the purchase price. And
Wow.
this loan product, it's extremely attractive when you have someone who, maybe they have low liquidity at the time because they have multiple deals going on. And what you mentioned about this deal you just had where they had to put, what was it, 15% down?
Yes, 15%.
Right, 15%, that's pretty good. However, when you can borrow the entire purchase price, right, and you have enough capital as well to, put in for the renovation cost or whatnot, or maybe it's a light renovation. I'm seeing a lot of these deals too where it could be a can of paint and some carpet to freshen up the property, put it back on the market, or lease it out. Right. And I think too, for us, when we work together, is you have an investor that needs to close quickly, the high leverage. That's where we can come in. They renovate the property, lease it out. Maybe they go back to you for that long-term debt structure that you have access to. So I think the back and forth play on something like that would be a really great scenario for the type of companies that we have and the pipeline that we have. And I think that goes back to how other banks underwrite. Some underwrite with a lot of red tape,
Mhm.
and our company, I would say, we underwrite with very little red tape, which is why we can originate a loan and fund so quickly. For us, as a debt fund, we underwrite based on the asset, not necessarily the person. Again, when we underwrite based on the asset, things change. So why don't you tell us what else, are you looking forward to in 2022 for your business? What are you, hoping to get out of this year? What changes?
Well, as we know, the market's shifted, and it's going to be the hot topic year round, in the mortgage industry. And really, the biggest thing is to help a lot of the borrowers that we do have with purchases. There's going to be the situations where um, the refinances are still needed. I mean, the rates aren't that high yet, so there's some good opportunities there still. But for the most part, focus in our main niche is getting people into homes, getting people from their first home to into their dream home, facilitating that. Um, so in just kind of working hand in hand with, companies like yours, our sister brokerage, to go ahead and kind of come together and put them in the properties.
Yep. Sounds good. Well, I appreciate your time. This has been hopefully, for anyone listening, beneficial. And for the sake of, the purpose of this podcast is really just for people to understand two companies here and what we do. And so if you do have any questions, we'll have some contact information provided so you can get in touch with Herb and myself.
Awesome, Mike. It's been a pleasure, but I appreciate the opportunity. And yeah, we're looking forward to a great 2022.